Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We start out the show with an announcement. If you get a chance, please listen to Basil Chapman's presentation this week, folks. It's always worth the price of admission. He really has some great stuff in there, and the way that he does his wave counting is very similar to the work that Richard Wyckoff did. I don't know if the similarity is there, but boy, it certainly looks that way when you look at the charts. But he does a great job at this, and I think you'll really enjoy it. His historical perspective on some of these things is worth the price of admission itself. So try to do that if you get a chance. As we start the week, we'll take a look at the German DAX and the FTSE. They've been under pressure last week, and of course everybody's talking about the virus, what's going on over there. And you hear so many things, you don't really know what the heck is really going on. But, follow the charts. If the prices go up, there's more buying. If prices go down, there's more selling. A couple things of interest that I think we should probably cover, and that is regarding this cycle thing that I was talking about. Of course, way back when Hector was a pup, back in January the 10th, I wanted to bring this up to show you what we're looking at. Now, here is a daily chart of the New York Stock Exchange Index. You'll notice that it topped on the 18th, I believe, and we were looking for the top to come in to the 10th or the 13th. These were 5 planets all lined up at 0 degrees, much like we had in 2007 and 2000 and many other years, about 6 or 7 other times in history. And I thought that maybe it had failed. But, folks, actually what happened was these things, the Dow Jones melted up, the S&P melted up, and the NASDAQ melted up. But the actual stock market, the New York Stock Exchange Index, the broadest of all the indices, over 2,300 of the most actively traded and highly capitalized stocks, did not make it above the 786 on a closing basis. We hit the 786 there on February 4th of last week, and then we backed off from that level a little bit. But and not the 4th, it was the I forget one of those days early last week. Well, it was Thursday. Shut the front door. Anyway. That cycle high has basically held. It's just been those. See, when you're doing the NASDAQ, folks, that run in the NASDAQ is done by 15 stocks, and the run in the Dow Jones, those are all, those are price weighted. They're not cap weighted. So that's a big deal. And then of course the S&P, there's about 30 or 40 stocks in there that push it up. Of course you got Google in there and the others, but this is why I think that's still pretty good. So we'll see whether that's going to be a pretty good top or not. We really don't know. I do want to get into a story today. I had an interesting conversation this past weekend on Saturday morning. I got a call from far, far away over in the Middle East, and this gentleman called up, and he said, I need some help. And I said, well, what can I do for you? He said, my son got out of college, and he said he had read your book, and he wanted to do some speculating, so I gave him $20,000 to speculate with. And I said, uh-oh, here it comes. And I said, well, tell me the story. He said, well, he did really well. He said, in fact, he did extremely well. He said he took the $20,000 and he got it up to $240,000. And I knew what was coming next. And I said, and what is it worth now? And he said about $30,000. I said, well, look at it this way. He's up 50% on the year. And he didn't quite look at it that way. But he said, what did he do wrong? I said, well, in order to figure that out, I said, you've got to look at his statements. And I said, would the young man be applicable to, chatting with me? And he says, well, I don't know. He's in a pretty bad space right now because he feels he's been a big failure. And I say, look, anybody that can take 20 grand to 200, just a little about 272, I said, is certainly not a failure. He's just made some, really silly mistakes, and trust me, I started that university. Anyway, the young man didn't want to chat with me. And I haven't got the statements as of yet, but I told him, I said, here's exactly what happened. I said, for 11 months, he followed a plan that was working great, and then he made a mistake. And he didn't correct the mistake. That's got to be what it is. And, I said, it's the only thing that the only thing that's going to cause that is a mental lapse, and that's exactly probably what happened. My guess is he started adding to losing positions. He stopped using stops, and I don't know what his percent win to loss ratio was. Hey, I don't even know if the whole thing was true or not. All I know is the gentleman seemed very emotional and very, very, very sincere. And but anyway, that's the story, and I'm sticking to it. So until I hear more from him, I told him, I said, you send me the statements, I can tell you what he did wrong. I said, I can do that in a heartbeat. And so he said, well, I'll chat with him a little bit. And I said, you really should chat with him. I said, because people that can do this are very, very rare. They're in the same classification of Tom Hugard and Amos Hofstetter and what's his name, Frank Tauscher. So you should really encourage him to, not to really do this. So we'll see this. Now, folks, there is so much stuff going on over there with this virus stuff. You really don't know. If you remember, we had Shane on last week, and he said it would be at 50,000 in a week or so, and we're way over 40 right now. It's following that log chart that he had put up on how the thing was going to evolve. So it is getting worse. It's not getting better. And the stories we hear, some of the stories we hear are just absolutely, they're unbelievable, actually. Of hundreds of thousands of bodies being burned and just buried in graves. I mean, I don't believe any of that stuff, but that's what's out there. And if you get on the internet, you're going to find all kind of crapola like that. So that's the main thing. The $64 question is, what is going to happen to the U.S. dollar, folks? Because it is starting to do some screaming. And when that happens, that tells you that the euro is really breaking down badly. That's a sign that we're probably going to be, looking at some real serious. What did I do wrong? Did I do something wrong there? I certainly did. Oh, no, here we go. Let's get this euro up here so we can take a look at it. We're heading down today. This morning we had a little 30 pip rally, and then it's starting to break again. The ABCD on this next structure comes in at 108.60, and that means that dollar index is breaking out much like we thought it was going to do, and it is doing it. So we're continuing higher here, so we'll see whether that has a whole lot to do with it or not. But there's a lot of stuff going on in there. If we get that up to that ABCD, we're going to be making a double top up there at that 99.40 level. So that's one thing to be looking at. So we'll be able to see what's going on. Folks, remember, China has 1.4 billion people. Do you know? It's just you'd have no idea how many people that is. If you can figure it out, that's 6 times bigger than what we are in the same geographical area. China, if you overlay a map of China over the map of the U.S., geographically they have the same space. So, and they have the same beautiful treasures of architecture and beautiful that Yi River area. Oh my God, that's just like a Grand Canyon. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back. I'm doing a little bit of house cleaning here for a second. I got to send out a quick little notice. Hold on one second, and we'll be done here. Almost ready to go. 10-4 rubber duck. We're all finished up here. First question someone's asking me today is we're going to have Tim Boston as a guest. Hopefully it'll be the end of this week. I've contacted Tim to try to get him back on, and also I'm trying to get Bill Meridian back on one more time because there's several people have asked questions, about what he's looking at in some of these markets because he's been pretty good, and people want to continue to follow him to see what's going on. So let's pay attention to that. I did want to bring this next chart up. This is someone that does a lot in cryptocurrency. We'll get this up here so you can take a look at it. You'll notice there's a whole bunch of these. There's thousands of them. You'll notice here, this happens to be what they call the big three. Bitcoin is, of course, number one. You can see that's the one in black. The one in purple is XRP. I have no idea, Ripple. And then Ethereum is the one that's been running the most. It's up about 69%. So these are very, very highly speculative. But they're in the news, and cryptocurrencies are probably here to stay, mainly because of the blockchain technology and all that kind of stuff. So we'll see. We do have a chart of a Bitcoin that I wanted to share with you because it follows the same patterns as the other things that we look at. But here you'll see here that we had this really big move here over the weekend here on Sunday, and then the markets had an outside day. In other words, it took out the high of Saturday, and then it trades 24 hours a day, folks, on different exchanges. So God help you if you're in the wrong one. Anyway, that's you'll notice if you look at this coin here, if you look at the time from around the 15th of January to where we are now, you can see that nice little three drive pattern that formed there. Right there around the 18th of January, then the next on the 30th of January, and then the last one which came in today. It's a beautiful ABCD three drive pattern saying that there's probably going to be some correction coming in. As a matter of fact, it did. Remember, these patterns, folks, they have predictability built right into them, but the real usefulness of them is that they help you control the risk, because when these patterns fail, they go on to the next levels, and you can't stand, in front of those levels. There's just no way that you can do that. It's just too powerful to pay attention to. Let's see. We're checking the markets this morning where we are. We're still we're not coming down too badly, are we? We're here. Yeah, we're down near 15. Let's see. We should stop. See, last night, folks, believe it or not, we got down to 33.03. We were down 60 handles from the high, and then we rallied all the way up. We rallied 30 handles up, and that made it pretty strong. Maybe we have a guest coming in. Yes, we have a full moon. I believe it was Saturday was the full moon. It might have been Friday. Friday or Saturday was the full moon, and so it was in that zone for sure. So we'll see. Of all the lunar cycles, that's the one that's the easiest for traders to use, because it's nothing more than a 28-day cycle. You cut that in half, it's 14 days, so it's pretty easy. But the astrology stuff is pretty tough to do, at least from this cowboy standpoint, because it's got a lot of numbers and stuff that really shake up the tree, so to speak. We'll keep an eye on that, of course. The other one that looks interesting here is because of, let's just get this separate. I wanted to show you because it's all related to the things we're doing. Let me get this up here. This is the Treasury bonds. I wanted to get these bonds and notes in here. Let's do the notes first, since it's right here. This is the long-term daily chart on the notes. Now, if you'll notice here, the low that we made on Thursday was right at, we made a double low there at that 382 retracement. That's very, very important support, because it's the 382 off the December low, and that tells you that there's a possibility if we're really strong today, and if we get above 132, folks, it looks like the old cowboy's going to have to put his horse in the old corral and pick up a ski board or something and ride on that one of Mr. O'Brien's yachts out there in St. Petersburg. So I don't think we're going to see 177 or negative interest rates or anything like that, but there'll be a flight to quality for sure, especially if we start going below 3,300. Folks, if we go below 3,300 in that S&P today, that is really negative, especially coming off to the these highs that we made last week and then backing off a little bit. But we still could be in a melt-up zone in stocks, no question about it. I know that the New York Stock Exchange has been lagging badly. The Russell has been, we use Gorilla Glue around here, Mr. Z, much stronger. The Russell has been lagging badly, as well as the New York Stock Exchange index, but the FANG stocks went crazy, and that pushed everything up. So we'll see. But remember that run up in stocks could be done with about 50 stocks, folks. 15 or 20 in the Nasdaq, 30 in the S&P, and it's done. That's pretty much it. And if Maria, if you want 330,000 in the Dow, then let's get it for you. Everybody get your buying shoes on and get it. Hey, look, do you realize that where we were back in 1987, we were down at 1,600, and we were in 2009 in March, we were trading at 6,400. So why not make it 30,000? Hey, if Tesla can go to 800 or whatever it is, the rest of them can go pretty much. Now, interesting about Tesla, let's take a quick look at it, because Mr. Hugard is interested in that stock, and he's doing quite a bit in it. You'll see the different, I put up, I'm following it just for technical purposes. It's a lot of fun. Anyway, I put, the different harmonic numbers. Now, you'll notice a low that we made down there at 697. We made a perfect ABCD last night up there at 820. That was all that was just a tiny bit above the 382, which came in at 800. There's a really nice ABCD there, but it gapped up Sunday night, in the middle of the night, because it trades in the middle of the night, believe it or not. And that was telling you that it went up, and when it did get to 800, I don't know where it got to 804. I don't know where it's trading right now, but we'll have to do one thing at a time as we look at these through the eyes of the old technician here. Okay, we have a question about the live hogs. Let's get this up here so we can take a quick look at it. They're looking better, but I'll tell you, all of these commodities, the hogs finally had a pretty nice move up. And thanks to our good friend Ruby, she was down there buying it around 62 and change. It's up now about 4 cents. Actually looking pretty good as of Friday. We left a little bit of a gap there. In fact, I would raise my stop just at that top of that gap. So if it does reverse, you don't have any reversal on this. But this was a big ABCD in the hogs, folks, from 91 all the way down to 68, and 68 up to 85, and 85 down to the ABCD at 62 and change. So that is a chance to have a really big move here. Just a 3.82% on this hog will take you to 70. So it's to 72 actually. So it's got a long way to go just to get to that point. So, and who knows, it may be a major bottom. The other one that looks really interesting, we are going to cover it when we get back from the break, but this is the natural gas, because something's not natural today. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at the natural gas. First, we're going to look at it on a short-term basis here on the daily chart. And this is I'm going to cover that, Marshall. Just be patient, cowboy. Just be patient. We're going to get to that old 3-drive pattern. Hold on one second here. Get this up here. You'll notice here, this is where we are here with the natural gas. Up here at around 288 that's a long time ago. We're down to some really, really interesting time frames here. You'll notice that we're at a 1.27 expansion right now here at 177. That's been the low of the day so far. But I do want to share with you. Hold on, I've got to answer a question here. That's not the hog chart. That's not a hog chart. That is the natural gas chart. That should be the natural gas chart, unless I'm wrong. Well, maybe I did it the wrong way, but that's natural gas. I hope they might look the same, hogs and natural gas. No, they don't look anything like it. But anyway, you'll notice that's where we are on the daily. Okay, now let's move on and go into the far, far stretches of the universe and take a look at this on a very, very long-term basis, going back to it goes back to 1998, but I just wanted to show you where we are on the monthly cycles here. Get this up here to take a look at this. You'll see here that we are due for a monthly cycle. There's a 47-month cycle that's due this month, and so we're down in this area right here, so we could easily make new lows. My best price to buy that would be at 175, and the reason why, folks, if you do the homework yourself, like 21 says, defy human nature, you'll notice that there's a 1.618 expansion there at 175, 176. Now, we made 177, so that's like separating tapioca from chocolate pudding, but they could be very, very close in here for a bottom. So that's what we're watching here as a potential bottom. We've been waiting for this for a long time, so now it's here. If you've got a lot of chutzpah and you want to risk it, I would suggest you buy it right in here, and you're gonna have to be like the natural gas farmer and put about a $500 stop on it, but you don't have to own any natural gas equipment. But it's in an area where I certainly wouldn't be selling it short, and it does look like these patterns are starting to line up that they could be bottoming. And the key word there, two keywords, are could be or possible, potential. It's never 100%. So keep that in mind very, very closely. Hold on a second. I've got to answer a Skype message very quickly, and then we'll move on to the section that's back on here. We'll be looking on here. Okay. Here. Oh, dear. God bless O'Shane. He's updated the let me get this up here, folks, so we can take a look at it. He has updated the confirmed cases. Wow. This is incredible. Thank you, Shane, very, very much. Let's get this up here so you can take a look at the confirmed cases of the coronavirus. Folks, he gave this to us 10 days ago. Hats off to Shane. I hear the sound of one hand clapping, Shane. Fabulous chart. But this means that this thing is going to get a whole lot worse, which they've been saying all along. So who knows? Maybe it'll just keep going for a while. I don't know. But we've got a lot of stuff that'll help cure it. We'll be able to see. But the news, folks, the news is coming out, and it's I think it's bad in politics when they start firing that stuff off with medicine. Is really it's really not very good. So that's what we're looking at here today. So keep in mind. Let's get back to the natural gas. Buying it down here at around this 178 level, 175 is what I think is the drop dead, fail safe level. And so if it goes below 175, you got to get out because, we've been down to 160s before, been 15 years ago, but we could easily do the heck. We might go to 150s. I don't know. But the cycles are there. If that monthly cycle is correct, the daily's got the expansion there. So this is what you look at. You don't have to risk very much in here. So hopefully that'll be of some help. The gold market last night, there's a big difference between the gold, the silver, and the platinum. The platinum looks the weakest of the three, followed by silver, and then gold being, of course, the strongest. But it has held up relatively well. And as long as gold does not get above the 1582 level, last night's high at 1580 was an exact to the tick 61% retracement from the high that we made back there at 1613. So keep it, 1595, just a minute, we get that, 1595. So it's setting there, right where it should be. Now, those of you that follow Fibonacci numbers, and I know some of you do, the low this morning that we just made in the old stop and P was exactly at 13.15 was exactly 61% retracement of the low that we made overnight at 33.05. Stopped exactly there, and we've already rallied 10 handles. So this is, and the NASDAQ has already rallied about 35 handles. So that's a very important number to put your chart pencil around, folks, at 33.14. Getting below that would be a relatively negative opinion as I look at this. So we'll see. Now, someone's asked the question, are these self-fulfilling prophecies? No, they're not, but people do look at them. Folks, when I first started to do this stuff on Fibonacci way back in 71, it's 1970s when John Hill showed it to me. It took me a year to figure out what he was trying to tell me. I had to be banging my head on the desk. But then I started, I showed Joe DiNapoli, and he made a living off of it, and a few other. Carolyn Broden did pretty good. But they are just natural occurring numbers. They don't work all the time, but when they do, you have to respect them. And that's what you're trying to look at as you watch some of these things here. So it's very, very important to keep that in mind as you're looking at some of these things, unfolding, through the morning. So that's neither here nor there. Let's move on here to one other thing. The Treasury bonds today, we got above 163 in the Treasury bonds by just a hair's breadth. I'm looking at the price of 163.22 as a very important number in bonds. If we close above 164, folks, that'll be a very, very powerful number, because that means that rates are probably going to go lower for the next few months, rather than higher. So we'll have to do one thing at a time. Questions keep coming up about the euro. Folks, the euro is a dying quail. That thing's heading below 109. We're at 109.28 right now, folks. We're going to blow, probably the target is 108.60. That's just the ABCDD level. But if you look at the long-term weekly on the euro, which we have many times, you could easily see par. That's 100. Remember, the euro was at 84 twice. When it started in 98 and then again in 2000, when my grandson was born, it was trading at around 65 or 70, as I recall. Maybe it was 85. And it had to be 85. It wouldn't have been 65. Yeah. Well, maybe I'm wrong. Let me double check that just to be safe. My old gray matter here doesn't always kick in here. We'll see here. Well, then give you, let me see. No, the lowest we've ever been is, wow, that doesn't show that very much. No, it doesn't give you enough data here to check it out. Just give me a second here to oh yes, let me see. 80 was the number. It'd been to 80 several times in the euro. So and then we went from 80 to 160, and then here we are trading at 109. So it jumps around quite a bit. I think we have a question from someone coming in. 877-927-6648, and Marshall's asking a question. Have you ever found connections with time with fibs? Yeah, Marshall, but by the time you put them on your charts, they passed. So I focus on the price. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we were talking about the natural gas as possible bottom in here. The stop's got to be below 172, so you got to risk about $600 to get into the natural gas industry. And believe me, it could be worth the effort if it does reverse into this area. But in fact, that doesn't. Another one, we're having a big move in this U.S. dollar, as we mentioned. But I wanted to point out to you the fact that the British pound made a very interesting ABCD pattern here last night. You'll be able to see it here. It's a beautiful ABCD down at the bottom there at 128.70, just fitting in just really nicely with some of the things that we try to follow as we're looking along here through these days. So we'll see if that is going to be the same thing that we're watching here during the day. Anyway, let's move on here. And our first question is, how long ago did Mark Douglas pass away? It was 4 years ago. He died on, I believe, September the 11th, as I recall. And that was 2 weeks before his 66th birthday, as I recall. I miss him every day. I can still see him sitting here in the office with me, chatting every day like we did all those years, and all the neat people that we met. Oh, my gosh, it was just it's a real joy to be around. Let's move on here. We've got another question about the cattle. Folks, I haven't done anything in cattle for quite some time, but we'll take a quick look at the cattle chart here for you here, because it's getting down near the 61% retracement in here, and you'll be able to get this up here to take a to see if it's going to hold. That's around 116, folks. That's about 3 cents from where we are right now. You notice the little bit of that sort of a head and shoulders pattern that you had here. It's not really a good definition of a head and shoulders, folks, because the right shoulder is higher than the left shoulder, but it is still a head and shoulder because it didn't take out the high. If it took out the high, that would have been a 3 drive to a top pattern, and it wasn't. That would have been at 129. That would have been, ring the bells, mother, God, and country type stuff. But this one is a little bit different, so we'll watch it as we go through. But 116 is what you want to be watching the thing. The other one, the living room. Yeah, my den is now the living room. Pretty well, it is for the first couple hours of the day. That's absolutely for sure, Bill. One other question someone's asked me is about the astrology stuff, folks. And like I said before, the best thing to look at are the full moons and new moons. That's nothing more than a 28-day cycle. There's other cycles in there if you search for them. that you can use them to your advantage. But basically, folks, I just try to look at the patterns. When the full moons and new moons come in, I look at it. And, of course, we had this big thing that happened on the 10th to the 13th of January. That's a monster thing. So that's neither here nor there. So we'll see what's going on, at that time. I will. Marshall asked a question about using times. Marshall, the one thing that I really respect is that opening hour in just about everything, because that opening price is just that's just been the backbone of many trading systems that work really good. And you'll notice here that we had this big sell-off last night at the open. We got down to 33.03 and we rallied 30 handles. And what did we do this morning? We hit the 618% retracement. We rallied 15 handles. So these times work really good, but to try to make them perfect is really difficult, because time is the most elusive of all the things that we look at. So all you have to do is to try to find a pattern that tells you this is it. This is where it's got to stop. The old, what do you call it? Shut the front door. The natural gas. We're down here at 178, 177. If you wanted to be really tight about it, you could just put your stop at 176 and just risk $200. I think you got to give it a little bit more of a leeway, because you're down here against some really strong 1.618 expansion numbers. So I would give it a little bit more. So that's what I'm watching, and I'm sticking to it. So we'll do that as we move through here today. We will have Tim Boston, I believe, later on this week. That's for sure. Bill Meridian is still, I'm not quite sure if Bill's going to be incommunicado or not, but we'll try to find out what else is going on. Let's see if we're still rallying in the stocks. Had a pretty good rally. Let's see. Yep, we're still bouncing back pretty good. Now the NASDAQ went up and just took out the highs that we made overnight, which was at 94.40. We took that out by, we matched it, 94.38, and that number in the S&P would be 33.31 or 33, I believe, would have been that number. So the NASDAQ is like the thing on steroids, folks. It really is. It's really a tough one to pay attention to. So we'll do that one thing at a time as we walk through the valley of trading, as they say. The crude oil. Now, there's one we have to pay attention to, folks, because that one could be looking at the something really bad. Let's get this up here and take a quick look at it, because we're below $50 a barrel again, folks. You'll notice here that during this break that we had from January, it went from 65 to 50, 15 handles. We only had three very small rallies of $2 and $3 per barrel that lasted 3 or 4 days. We just finished the last one last week, and if we get below that 49.60, which we came really close to last night, we got down to 49.72. We're trading just a little above that right now. If we get below that, this is telling you that there's not going to be a lot of demand for oil, and with Tesla, selling a lot of cars, and maybe everybody going to the electric cars, there's not going to be any need for gasoline. Believe it or not, folks, you're going to find this hard to believe, but the kerosene lamps, you can't even find one of those unless it's a replica. So, those were the things that ran the country with old John D. Rockefeller and Standard Oil. That's how he made his billions. Kerosene lamps, replaced later by Edison and his electricity. So let's take a look at Tesla and see what it's doing this morning. I want to keep a close eye on that. Just give me a second. Oh, shut the front door and Razor it. This will take me a second to get this up here. And we'll be moving on to the Tesla. Hold on. There's where we are. See if we get, we backed off a little bit already. Hold on, 15. Let's get this up here so we can see it. Yeah, it's doing the same thing as it was before. It just made a 382 retracement off the whole move. It's not really doing very much at all so far this morning. We've had a very, of course, with an $800 stock at $20 range is absolutely nothing. So we'll watch that as we go through looking at some of these things. Okay. All righty. How much time we got left? Well, we got 1 minute till the break. Shut the front door and Razor it. Let's see if we got another. Right here we got. I wanted to thank Shane again for sending that graph of the coronas. Oh dear. Wow, that's a really big one. he wants to see, oh my gosh, we could be at this next 1 week from now, we could be at 75,000 cases, folks, from where we are right now with this coronavirus, just based on this chart that he's looking at. It's just really something. Yeah, I don't use a kerosene lamp anymore, but I've got one of those battery jobs that my good friend from here in the den gave me, the Mr. Larry, and that is the neatest little battery operated thing I've ever seen. Let's review here the British the bonds, folks. If we get the bonds above 164, it's going to be game on, because that's going to be a big breakout. But they've got to clear 164, otherwise they're in a lot of trouble. So remind yourself of that. That's a very one to watch. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart of Tesla. The reason why I did is one of the most active stocks that we have at the NASDAQ. It's also, in the news every 15 minutes, much like Apple was for many years, and Apple still is, as a matter of fact. But you notice that it does follow the numbers extremely well. I've already posted the pattern of how the high was made. I'm not going to redo that again, but this is just an hourly chart, just showing you that after we made the bottom, the market pulled back to exactly a 61% retracement there at 720, and we've just now completed the ABCD at the 50% level at 820. So if it gets much above 830, that means it's probably going to keep going higher. And believe me, the rumors here, we're hearing the same thing. It's not about the cars. It's about this battery innovation that's come out that allows the cars to drive farther and farther. And so we'll see. Never could trust a car you can't hear, boys and girls. That's the way it looked like there in Terre Haute, Indiana. Still believe it. All right, we got one other thing to cover, and that is the gold, folks. Gold's got to get above 1585 to be bullish. If it doesn't get above there, it's not bullish. Silver and platinum still look bearish. I sent videos out on those today or Sunday. So, review those if you like, and you'll see they still look bearish to me. Crude oil is real critical. It looks like it's heading down to $44 to $40 a barrel. The only way that's going to change is if we get it above $52 a barrel, and that might take another 20 or 30 minutes, but we'll have to wait and see if it's going to do that. 1585 is the key in the April gold. If we get above 1585, it's chance for having game, and it could be, rocking and rolling. If you did the natural gas, put your stop at 172. That way you're risking only about 600 simoleons, and you won't have to, go out and flip burgers over at McDonald's, because it's all about risk control, folks. It's not about the money you make, it's the money you don't lose, and keep that in mind as we go through these trading trials of life. And tomorrow will be another day. Every day in an attitude of gratitude, and may God bless, and do something nice for the folks that don't have much, and there's a whole lot of those out there.